First, just a quick agenda. I'm going to walk through briefly what we'll use as kind of the gold standard. It's Airbnb's pitch deck from 2009. They're then called Air Bed and Breakfast. Then I'll walk through the 5 key mistakes. I know we initially set out to talk through 10. There actually are more than 10 in here. We just decided to package them and present it thematically. So it's chock full of detail, but we've identified 5 key kind of thematic mistakes that lots of founders make when they're creating their pitch deck and fundraising. So I'll walk through all of those. You can see a little taste there. And then, like I said, we'll move forward to Q&A and discussion. So the first mistake that I would say is one of the most common is founders or companies. Actually moving forward to just talking about the Airbnb pitch deck for a second, and then we'll move forward to brevity. But so Airbnb, this is from their seed round in 2009, so fresh out of the 2008 financial crisis. A quick, some notes on this. They had very minimal traction at this time. It was right after a global financial crisis. It was at a moment in time when people thought the notion of staying at a stranger's place or letting strangers stay at your place was probably weird and dangerous. This was after YC, but they secured a lead, Sequoia as a lead for their 500K angel or seed round. Now the company is worth nearly $30 billion and is set to IPO this year and is one of the big tech success stories in unicorns. So pretty safe bet that we can take some pitch deck pointers from them, and I think that we should be able to glean some insights and confirm and validate some of the feedback and recommendations we hope to give you. First, a quick note on I just think the space and a little bit about why we're doing this before we really dig in and move forward. We wanted to make sure that in this really tricky time, it's isolating, scary. Of course, we're all with you and hope you're remaining safe and healthy, and same goes with your friends, families, and loved ones. We wanted to, let everyone know that we're full steam ahead on Republic, and we're committed to being supportive of founders. So we have this series of educational content webinars, one of which is on fundraising focused and on building a good pitch deck. In terms of what we're hearing from the ecosystem, and I think we can sort of table this after for the discussion, it's a bit of a mixed bag. So we've been hearing that there are lots of VCs who are continued to committing to deploy capital and support founders, either the founders they've invested in or founders that they hope to invest in. But we've also heard from founders that it's a difficult time to fundraise. Conversations are being stalled out. VCs aren't getting back to them. VCs are saying they're not deploying any new capital for the next few months. What that tells us is, like a lot of things, it's a mixed bag and probably a bit early to tell because we're only a few weeks into this thing in the US at least. And so with that, I think, fundraising still needs to be top of mind for founders because runway is as important as ever in moments of uncertainty and volatile markets. So we thought this was an important presentation because the pitch deck is one of the key elements of a successful fundraise. So we wanted to put this out. So moving forward, I'll reference this Airbnb pitch deck throughout the presentation, but without further ado, would love to move forward to the first common mistake, which is making a pitch deck too long or too wordy. So I would just say, as we all know, VCs have limited time. They review hundreds or thousands of pitch decks through, their year or their quarter. It's really important to not be too text heavy. The pitch deck should really be a teaser and should aid conversation, and it's designed to be walked through. It shouldn't look like a memo or an essay, and slides should have mostly white space and images with some text that complements it. In terms of the body of the pitch deck, we recommend really 10 to 15 slides. A quick note here, I think there are different pitch decks that are required for different stages of the fundraising process. Right now, I think we'll mostly talk about kind of the seed to Series A type company that's making their first approach to a VC or an angel group or the like, where you really want to have a compact, concise, really compelling pitch deck that just gives a taste and hopefully leads to a first call. Of course, you have to be nimble and adjust if you're a later stage in conversations with a VC, or if they know your industry super well and you find it relevant to dive deep in certain aspects of the deck. That can be a different story. that's all to say that the pitch deck should be kind of a living, breathing document that you can adjust for appropriate contexts and for people. So we recommend for that kind of first approach, 10 to 15 slides, and you should really focus on the major organs of the company. So I think every pitch deck should have a problem and solution slide or multiple slides that discuss the problem and solution thoroughly, a market, a competition, a business model, a go-to-market, a traction, a team, and a financing ask slide. Of course, like I said, different contexts and different companies will call for additional slides. But my guidance is don't go crazy. Consider including an appendix if you feel like things really need to be included, but maybe they shouldn't be in kind of the heavy hitting, your 10 to 12 slides that you send around widely. And just, the guiding principle here is really concision. Airbnb's deck, which by the way, I'll send along a link after to this, but it's also publicly accessible and easily Googleable. Their deck, it's a massive idea. They have tons of white space, and they have really short sentences or bullet points to express most of their ideas. And I think it really packs a punch and exhibits the importance of concision. So definitely recommend taking a look at that. Moving forward, believe it or not, I think in probably 30 to 40% of the pitch decks I review, I finish the review and think, okay, what does the company actually do? So I would say it sounds a little bit obvious, but it's so often that founders or companies actually forget to explain the core product deeply and meaningfully. So I think there's a lot of guidance in the fundraising and VC ecosystem that it's really important to have a mission statement, which is awesome. I think it's really important to be grand, have a statement about how you want to be the future of work, the platform that powers the future of work, or that you want to be, in Airbnb's case, the platform that helps people save money, make money, and share culture globally. But be sure to follow that up and tell us, what does the company actually do today? Include some product shots like Airbnb has. Walk us through what the core features of the product actually are and how users are using it. So that we're not just left with kind of a statement of fluff and a vague idea of what you might be actually doing. So, and another pro tip I would give on that front is Airbnb. In Airbnb's case, it is a platform, but not everything needs to be a platform. So almost every company I speak with, or not almost, but many companies I feel like just like to include buzzwords like platform. I think that can dilute the message even in a mission statement. So just be careful with, tech and VC buzzwords, and make sure you're actually meaning and what you're putting on the slide, and that it reflects what the core business, the operational business, is doing today.
Hey Kyle, not to derail you, but I had a quick question I thought would be helpful to talk about. And sorry I didn't bring it up during our dry run, but how about before this point, when you receive a pitch deck, could you touch on, I have my pet peeves about it too. Like I really appreciate when I receive a simplified PDF, no password, no app that I have to sign into, et cetera, et cetera. So I don't know if you want to touch on that for a second, just because it's relevant to the beginning of reaching out to someone.
Yeah, really great question.
And the message that comes with it along those lines, et cetera, too.
Great question. I think that I agree with you. Ideal world, it's a PDF, no password, no anything, just easy to open it up and flip through it in kind of preview mode. Understand why some founders really like DocSend. They feel they want control of the way their deck is circulated. I think that's totally okay. I don't mind a DocSend link. I don't know if either of you feel differently. I also think that the deck, really for this kind of deck, it should be, it's not a memo. It shouldn't tell all. It shouldn't be all about your IP and the ins and outs of your secret sauce. It should really be a concise, packed, compelling teaser. So you kind of should be comfortable sharing that kind of thing with a PDF, but people feel differently about it. I feel like PDF and DocSend are both okay. In terms of the abstract that comes with it, I love receiving a couple of highlights. So whether I'm getting an intro to a founder, or a founder is reaching out directly, a few highlights on why the deal is compelling, or why they think the deal is compelling, why they think it's specifically a fit for Republic in our case, but specifically a fit for a VC based on their industry focus or their focus on the types of founders they invest in. So agree with you, PDF and DocSend are totally good with me and kind of ideal. A little bit of a summary about why the deal is exciting and why it's specifically exciting for the recipient, I would say is also a best practice.
Thank you. Thank you.
Lastly, I would say just in terms of kind of knowing your audience, not only do VCs tend to not have a lot of time, or say they don't have a lot of time, but I think it's also important to note that you kind of have to break down the industry and the market for them in your deck in a way that might seem obvious to you. So I think, you all founders know better than anyone. You're in the weeds and know the market better than anybody. So the different market dynamics, the incumbents in the space, large and small. Everything about the industry in which you're operating. You have to remember that the odds are the VC probably doesn't have that level of knowledge. They probably have the kind of knowledge that a lot of investors have, where they maybe have seen other decks of companies operating in a similar industry. So really break it down for them and give the macro lens about why you're the company to actually capitalize on the market opportunity and what exactly are the dynamics of the market and the confluence of, events or competitive dynamics that are happening that make your opportunity specifically compelling. And the guidance there, I think, is keep it really simple. And if you move forward in their process and you're in due diligence, and it turns out the person who's kind of leading your deal has great industry experience, that's awesome. The conversations will just be deeper and more substantive, and you can dig in. But when you're kind of sending a pitch deck everywhere and having sort of a spray and pray approach, definitely keep it general and simple and lay out the big, hairy macro idea for them. Moving on, this is a big one. So lack of transparency about traction. So just to give people context about how I often look through decks, and Chuck and Shrina, if you have any, if you either do this also, or maybe this is just one of my quirks, but my sense is this is the way a lot of VCs look through decks as well, is I'll actually flip through a deck and look for a slide that says traction or is titled something similar to traction. Not because I'm like, well, if they need to have X, Y, and Z traction, otherwise I'll close the deck, but more because I want to contextualize the rest of the opportunity once I understand what stage it's at. So if a company has some traction data points about their beta product, they have a few hundred users, some of them are active, but here's why it's really interesting because it's better than the incumbent product. That's awesome. A little bit early perhaps, but then I can look back at the team slide and I'm like, wow, they have really directly relevant industry expertise, or one of their founders sold a company in the space. And I understand the opportunity in a different way because I understand the stage. So that's not an argument to make the traction slide the first slide, but I think it just conveys the importance of that slide. So here's some guidance for this slide. For one, I would avoid projections that are pretty clearly fluff. So I see a lot of hockey stick graphs that don't have kind of like any real labels to each of the axes, or they're not time bound. They just say year 1, year 2, year 3. So don't really say anything about the historical performance if there's been any. Similarly, if there are like really round projections that just, you're making 5 million in year 1 and 10 million in year 2, it doesn't really say much about what the company is doing now. And it just looks a bit lazy and just like overly round, and just there's not enough meat there, I think, for the investor to really wrap their head around. So that's something I would avoid. Of course, investors do want to see, why is this a big idea? How are you going to scale? But make sure it's thoughtfully done and actually based on either some early traction data points or some market validation that you've done, and just be thoughtful about it rather than slapping a deck that shows, slapping a graph on the page that shows up and to the right growth. The second thing I'd say is don't mislead on metrics. So it's super important, especially in getting a first call, to put your best foot forward here in your traction slide. Of course, you want to show and augment and highlight all of the compelling parts of the deal, whether that's how big your user base is and how fast it's growing, any B2B contracts that you've inked or any pilots that you've inked for B2B contracts, how much revenue you've generated month over month and how that's growing. Those things are all really important, and you want to highlight those because that optimizes progressing to the next step in the process. But I wouldn't mislead on metrics. So if an investor, for example, if you're an Airbnb, and at this point they're pitching with very minimal traction, but if you're an Airbnb and you're have a slide on traction and you're talking about revenue, if you're calling your what's actually your GMV, your gross merchandise volume, so the total value of the transaction when someone rents from a host, instead of what your actual revenue is, which is their cut on it, their 10%, I think, in their business model at this time, then it's just a little bit of an unpleasant experience for investors to have to suss out what the actual traction is and really feel like they have to vet what those metrics mean. Whereas if you just come out and say, like, this is our volume, our cut is this, but when we're thinking about the market size, we think we can get here, and project it out, this is what our actual net revenue looks like. So just be really precise on metrics. Same goes with some companies that have they're a SaaS company, but they have a services component. I actually think that's awesome. Like if the team in the company has the industry experience to provide services that are directly related to the product that they're developing and taking to market that will be charged on more of a SaaS basis, that's awesome. That's an upside. But if you call that SaaS revenue and then the investor uncovers that it's not actually SaaS revenue, you're actually consulting around what the SaaS product will be, then it turns it into somewhat a negative, or that you were trying to obscure something, when it's actually awesome that you've done all this before you've actually rolled out your core product. So that's
to
all.
Me, this is when people lose control of their message, and it's the biggest point that I make to founders over and over again is controlling the narrative, control your message. You can accomplish that through through this pitch deck. You can accomplish it through variations of your pitch deck. Controlling narrative and controlling the message doesn't require you to, and these are a few points that Kyle has already made, fill it with too many words, make, statements that aren't really 100% factual. When people say, simple things like, be yourself, be honest, be straightforward, I think a lot of it does, come out to reviewers like Kyle, Shrina, myself, others on the Republic team who have seen these things dozens, hundreds, even thousands of times, and it starts to stick in their head as a trend, and we can sniff it out pretty quickly. So it's not advisable at all to lose control of your message. And I think, keep listening to what Kyle's saying here. You guys will get that picture, but try to the best you can.
Totally. And like I was saying before, and Shrina made this point when we were just kind of talking through some of these suggestions that we're giving. Of course, you want to optimize for getting that next call or moving to that next stage in due diligence. So celebrate and embrace and highlight all that you've done, even if it's a beta and a few hundred users, but you can talk about why that's important and why that's so meaningful, but ultimately be honest and transparent, because if the investor susses out that you've really augmented your attraction data points to an extent that isn't, that is really fluffy or is not appropriate or is actually misleading, then it creates a negative experience. And there are lots of angels and VCs that specifically focus on early opportunities, so there's no shame about it. And they can certainly be exciting, especially at the right terms. So just lead with the most compelling, but certainly be honest about it in the way of traction. And Airbnb, I think one great tip about one way to do that is including a financial ask towards the end of the deck. So as you'll see, as Airbnb does, they're pretty honest about being very early on throughout the deck and being just, having a couple of users and gathering a few testimonials from their early batch of adopters. But it really cements home from the investor. It really drives home from the investor perspective what stage they're at when you see the financial ask, because they're saying they're raising a 500K angel round and that this is where they want to get to at that angel round, 80,000 bookings and 2 million in revenue. So it's pretty clear to any investor who looks at a lot of decks that they're at kind of a pre-seed or angel, in between pre-seed and seed, kind of angel round. It's still pretty early. Usually companies with a fairly small capital need, they don't have totally robust traction, but here's what they want to do with it. So the stage sort of presents itself, and I feel like I have a correct understanding of where the company actually is. Moving along to another really important element of the pitch deck is the team slide. So I think there are kind of two mistakes here. For one, some companies choose to not include a team slide at all. I would say including a team slide is absolutely imperative. It's one of the most important components of a pitch deck for a couple of reasons. I think the VC the VC or the angel wants to feel connected, not just with you who's emailing them or who's having a phone call with them, but also to your team. So I really recommend including pictures of you and your core team, roles at the company, and just some brief bios. Again, not an essay. A couple of bullet points about what you've done before would be awesome, or prior roles that you've held is really key. And again, here it's kind of like similar to the last slide on traction. It's not the end of the world if you're not an early Uber employee or you didn't sell your last company for $100 million. I think lots of VCs and angels find value in teams in different ways, and it's just more important to include it, because if not, they wonder, and it's just a much more anonymous experience. So would definitely recommend including one. And the second piece here is, once you've included your team slide, beware of adding additional fluff, especially when it comes to advisors. So I think that a lot of investors understand it comes off as a little bit of transparent if you, in your team slide, include like 6 advisors who are highly credentialed, who are thought leaders on LinkedIn and serial entrepreneurs or experts in the space. It's not to say that you shouldn't include them at all, and I think we have a good litmus test for whether or not you should include them, and I'll kind of share that. But I just think it's important to know that the team on its own can be enough to get a conversation, and you don't need to include advisors who don't actually have a meaningful impact on the day-to-day business, just to progress forward in that process. That said, lots of companies are lucky enough, and more than lucky, have worked hard enough to secure awesome advisors who actually do have a meaningful day-to-day impact on the business. So I would definitely recommend, the test is basically, if a VC asks you, hey, can you talk to me about your relationship with this advisor, how they helped you, how they driven results for your business, and you can answer that, then certainly include them, and actually lead with that story when you're talking about the team and kind of support that you have behind you. If not, I would probably err on the side of not including them, because it might just look like you're trying to add some fluff to beef up the team section. If you look at Airbnb's deck, basic bios and teams, a little bit about what they did and what their role at Airbnb. And then at the bottom here, I know it's a little bit small, it's Michael Seibel, who's the former CEO, one of the former CEOs of Y Combinator. I'm sure he had lots of meaningful day-to-day impacts on the business. I know just from reading a little bit about Airbnb's origin story that he actually referred Airbnb to Y Combinator, to the batch that they ultimately got into, because Michael knew Paul Graham, the founder of YC, and ultimately helped them get in because they were a little bit late on their deadline. So that's a great anecdote. I'm sure if they helped them get into YC, there's tons of things that this advisor has done for them. So that's a good example of when to include someone if you're on the fence. Lastly, this one sounds kind of obvious also, but it's so actually one of the most common issues I see with pitch decks is skimping on design and formatting. So it might feel kind of trivial, but it really can kill a pitch. When a VC or an angel is looking through hundreds or thousands of pitch decks, you just start to build an association, rightly or wrongly, to be fair, that a really poorly formatted or poorly designed pitch deck probably means something about the quality of the opportunity. But in my day, I have seen a fair share of companies that actually are awesome opportunities once they move forward in our process and we understand a little bit more about the nature of the market and the traction and the team. But their pitch deck just doesn't present as such. So it is really, really important, especially for the first pass stage when you're trying to get to that kind of first call. If design is your thing, that's totally okay. Our recommendations are, you can have a design forward or design focused team member take it on or take a pass through it. Even like Google Slides templates have really awesome tools that just make sure everything is like centered and font is uniform. Just like the lowest bar stuff kind of goes a long way in terms of presenting a pitch deck that's consistently formatted and well designed. And if you want to really get a super well designed pitch deck, but you don't have that kind of support in-house, there are platforms and tools you can use like Behance or Upwork. on this, I would say definitely like ask for some of their prior work or some examples that they've done, whether you're using Behance more of like an agency or Upwork, an individual person who does kind of pitch deck revamps. I wouldn't break the bank on this. It shouldn't be more than like a few $100 if you do decide to spend on it. And not everyone does need to spend on it. But in the event that you don't have kind of design and formatting support and you really feel like your pitch deck needs a little oomph, I would totally recommend it. And we can follow up with some more resources. We've heard founders used a lot during our time talking with them and reviewing pitch decks, but these are two that come up a lot. So before we move to Q&A, I just want to say, I know we didn't dive too deep into what Republic actually is and what we do. I assume lots of our attendees have a basic sense. But if you're at all interested in Republic and you're a founder, we would love for you to either learn more about us on our website, republic.co, and follow us on social channels and subscribe to our newsletter and all that, which we can follow up with relevant detail and links. And also, if you're a founder interested in potentially raising with us, you can apply at this link listed here, republic.co/apply, or email investment@republic.co, and my team will get back to you.